Hello, everyone. It's Stephen Whiteside here from the uptrend.com with this weekend's edition of Protect Your Portfolio. Well, I won't keep you long this week. It was an inside week for the major U.S. indices, so a week of indecision. The same terrible movie is still playing, The Tariffs of Stupidity. Not very many people are going to watch it, but a lot of people are being affected by it. And unfortunately, we're seeing the big move away from the United States towards China. Remember, the U.S. is in a trade war with the rest of the world. The rest of the world is not in a trade war with the rest of the world. So we're seeing lots of side deals and new deals being made, whether it's Canada selling oil to China or Brazil starting to fill the vacuum from U.S. farmers. And of course, China's buying meat from Australia instead of the U.S. at the moment. So there's lots of trade action going on, nothing to do with the U.S. at the moment. Now, there's still tension in the stock market, even though the VIX came down. I'll show some U.S. charts in a minute showing that the market actually had an inside week. So with the VIX coming down, we still have some room to go before we'd get bullish on the stock market once again. You can see that there's still lots of global tension. We had the price of gold make a new all-time high this week, heading towards our next price target of $3,437.50. We should be able to hit that this week if the stress level continues. Now, the US dollar index closed lower, didn't take out the previous week's low, so it had an inside week. It was an inside week for the euro. The British pound did move up. The Canadian dollar did make a new high for this move. So money coming out of the US into the rest of the world. Now, bonds moved up this week, and of course, that could be money coming out of the stock market going into the bond market. That put a little downward pressure on bond yields. Again, we're looking at some inside weeks here, and it's hard not to have an inside week when you follow up a very, very volatile week as we had the week before. Now, personally, I think this is the riskiest time to be an investor in the stock market in my lifetime, and I really mean that, in my lifetime. Now, from a trader's point of view, it really doesn't matter when you're in the market. The market is always going to go up and go down. It doesn't matter the value of the market. It doesn't matter if the S&P 500 is at 5,000, 4,000, 3,000, 2,000. Traders will be trading the market up and down, and they're always looking at a percentage move. They don't really care what the actual underlying number is. If the S&P 500 is at 4,000 and it moves up 10 points, that's 10 points. If it's at 3,000 and it moves down 10 points, that's 10 points. That's all they care about. They're just looking for percentage moves. On the other hand, if you're a long-term investor, and especially if you're a long-term investor from outside of the United States, in which you have the choice to invest anywhere in the world, everything has changed. And what the U.S. was known for, the reason that money from around the world was attracted to the U.S., that has all gone up in smoke in the past couple of months. So, to see the president manipulate the market, to see insider trading from the Oval Office, to see all the bribes that the president has received, the lack of privacy. You had Doge in there stealing all the information. No regard for security. We're using WhatsApp to launch attacks. The president was storing secret documents, top secret documents in his bathroom at his resort. Total incompetence of the people in the cabinet. And then, of course, now the president's going after the Fed. When you put all that together, and then just on top of that, all the lies from the president, investors around the world have no confidence in the United States whatsoever. And so money is not going to immediately run out of the U.S. It's going to come out slowly. If it comes out very quickly, everybody's going to lose a lot of money. But people are just sick of the lies. Everything coming out of the White House is basically a lie. And people have other choices. And so here we are. It's unfortunate. It's not something that I ever anticipated would happen, but it's happening right now. And it's not going to be good for the U.S. stock market going forward. Now, back in 1929, the stock market peaked. It didn't get back to that level to 1952. So we are nowhere near in a major decline right now. We're in a minor decline so far, but I don't see any reason that it's going to come around very anytime soon. And here we are. If you look at this particular chart, we're really way up here at the moment. So we haven't had our big crash yet. Certainly, there's We haven't had enough time to officially announce a recession. That takes 2 quarters. Now, for those of us located in North America, we're probably not going to notice anything. What's going to happen is as the quarters go by, institutions, mutual funds, governments, pension funds from around the world are going to gradually make the decision that there's probably safer places to put their money than the United States. And over time, they will just gradually exit the US market and be involved in other markets where it's Asia or Europe or Central South America. There's all kinds of choices that are available these days. And yeah, money's just going to slowly slip away from the United States. Now, you might have heard about the death cross, and that's where the 50-day moving average crosses below the 200-day moving average. It happened to the Dow. It happened to the Dow Transports about a month and a half ago. It happened to the Russell 2000 a while ago. It happened to the SOX index back at the start of March. So, there's lots of those going on. I'm not really concerned. I don't watch those at all. Other people do. Watching who's in control, the pros and the public. If you look at the SOX index, the semiconductor index, the pros gave up on that sector back at the end of February. And so far, they haven't come back to take control. So that is probably the most important sector in 2025. Now, I mentioned that for the U.S. market, it was an inside week, not necessarily for the Dow, but certainly for the S&P 500, the Nasdaq 100, the Russell 2000. Some of these traded actually closed higher on the week. There's the small caps up just over 0.5% on the week. There's the micro caps up nearly 2.5% on the week. But again, they're inside weeks. They're weeks of indecision. There is the U.S. financials down just a couple of ticks, just 2 ticks on the week. Then bank stocks were actually up on the week, up over 3.5%. Again, having an inside week. So we're coming off a lot of volatility. So we're looking for some sort of breakout or breakdown from the previous week's range, and we haven't got that so far. The Magnificent Seven stocks were down over 5% on the week. So that is certainly because of the size of those stocks can hold the market back. And so far, there's no sign that they're heading higher anytime soon. Now, looking at the Canadian market, of course, things are a bit different with the price of gold making new all-time highs. We had gold stocks up on the week. We also had energy stocks up on the week, so that can help. Now, the TSX 60 was up over 2%. The TSX Composite was up 2.5%. We had money back in financials up over 2.5%. We had bank stocks up over 2.5%. Then we had an inside week for technology stocks. They were up just under 2% on the week. So, because of the world of commodities, the Canadian market held up fairly well and was able to move up. We do not have any new weekly buy signals for any of those sectors. Okay, folks, that's all I wanted to cover. It's been a beautiful weekend here. It was an inside week for the U.S. market. The Canadian market was able to move higher on the back of commodities, and that could continue this week. We'll just have to wait and see. But really, what we're looking for here is a breakout or a breakdown of the previous week's range for the major U.S. indices. That'll tell us which way we're heading next. Again, nothing to do this week. If you're a long-term investor and you're sitting in cash, just sit in cash.